Happy Thursday. Thank you for a lovely pizza yesterday on Pizza Day and having us here.
That was two pizzas.
Two pizzas. And a cheesecake. I think that's the best cheesecake I've ever had.
And a steak.
And a steak. A whole... it was a... I mean, I don't think anyone finished it. But it's always good to see you. I think, when did we last sit down? Was it in Miami last year?
Whoa, it's been a while.
A lot happened.
Yeah, the world has changed a couple of times.
Yeah.
A couple of times.
You kind of have this pre-Bitcoin life and post-Bitcoin life where your world must have changed quite a bit.
Yeah, it definitely did. I would say, I started a company in 1989. I came public in 1998. There was the stage from 98 to 2008, and it was all business intelligence. And then around 2008, I felt like I'd conquered the business intelligence world. I'd been successful, and I'd proven everything I needed to prove. And so I wanted to go create value by inventing new stuff. And so I launched a bunch of businesses. I had alarm.com and angel.com and usher.com and wisdom and alert.com, and I think probably 10 different things. And I'd hit like a single, with alarm, but I ended up spinning it off. It's a public company today, but there's no way that MicroStrategy could commercialize that. And then with Angel, we sold it for a lot of money, but we couldn't commercialize ourselves. That was like an early competitor to Surrey and interactive voice response. And then we had a bunch of whiffs where I'd launch a business. It just didn't work, and it crashed and burned. And over time, I think I came to realize that it's very hard if you manage to do one thing in life and you're lucky enough to have one thing that's successful, you should declare yourself fortunate. And then when you start to do, maybe you can do a second thing, but the second thing is really hard. And then when you start thinking you can do a third thing, a fourth thing, a fifth thing, a sixth thing, and you're like the portfolio guru and you launch 10 things at the same time, you start dropping balls. And so when I got to, I think sometime in the 2012, 2014 timeframe, I realized I was going to have to refocus, and put the laser eyes back on and go back to just focusing on MicroStrategy's business intelligence business. And I focused on that from 2014 all the way to 2020. And we tried everything we could to grow that business 20% a year. Everybody in a tech business, the definition of success is, are you growing 10 to 20% a year? And if you are, then you're good. And if you're growing faster than 20%, you're great. And if you're growing 0%, you're just deemed a failure. Which, like if you grow your family 0%, you're not a failure. Like I have 3 kids. Imagine if you had to go from 3 kids to 6 kids to 12 kids to 24 kids to 48 kids to 96 kids to 192 kids. So, like every mother would fail. But in fact, in business, the expectation is you have to double, or you're failing. So I found it very frustrating. I tried spending massive amounts of money on marketing, massive amounts of money buying the stock back, massive amounts of effort doing other things. And by 2020, I think we realized that we weren't, success was continuing to generate cash, be profitable, but we weren't going to double. And then along came the pandemic, the lockdowns, COVID, zero interest rates, and the world turned upside down for a lot of people. And I would say the next phase of my life started somewhere in the March 2020 timeframe. And it forced me to rethink a lot of my ideas. I was avidly against remote work. I would have fired you if you wanted to work remotely in February of 2020. And in March of 2020, I was dragged kicking and screaming into remote work. And all of a sudden I discover Zoom, and then I discover YouTube, and I discover, all sorts of ideas for doing business remotely that I would have rejected reflexively just because I didn't, it's like I was set in a certain way. I was going to do everything a certain way, and something snapped me out of that. And in the world of finance, when the markets crashed and they rebounded, I saw this delamination of Main Street from Wall Street. Every Main Street company suffered, struggled, was discriminated against, was shut down, failed, almost like a death sentence for yoga studio or gyms. And not only were they harassed, shut down, but people were like sent to jail because they wanted to show up to the office, right? And then all the Wall Street businesses, they all doubled in value in 12 weeks while the world was shut down. And everybody on the Wall Street side of the equation had the best year of their life in 2020. And it kind of really shocked me, broke my mind. I'm like, how is it possible that this part of the society is having the worst year of their life? And this set of society is having the best year of their life. And then you have this schism where one group of people are getting rich and not working hard, and they don't see what the problem is. And another group of people are being decimated, destroyed physically, mentally, emotionally, economically, and there seems to be a disconnect. And it was in that environment that I just realized that there was a part of my business, which was Main Street, the $500 million software company, and working very hard. And there's part of my business, which was Wall Street, being a publicly traded company with $600 million of cash that earned 0% interest. And I thought, well, if we're going to be successful going forward, I'm going to have to embrace the Wall Street side of the business and rethink that. And it's obvious that if your T-bills are generating 0% interest, then you're not going to double your money invested in T-bills. So we went on this search to find something to invest in, and that search brought us to Bitcoin. And then Bitcoin forced me to rethink. At first it made me rethink treasury strategy. The convention of, there must be 43,000 publicly traded companies. The conventional finance view is your treasury should be invested in T-bills, sovereign debt, cash or credit. And that leads to the conventional view. You should eschew any investment that creates volatility. Never invest in anything that might go down, right? You want to have that money for a rainy day. And you should probably run your P&L so you eschew volatility. Volatility is a dirty word. So what's the perfect example? Like Microsoft sells 3-year contracts. So 3 years in advance, they know exactly what the price is going to be for their customers. And if you ask the CFO, how much revenue will you generate in the fourth quarter of next year? They know plus or minus 1%. So all they got to do is just tweak the cost and they will hit their numbers every quarter because the P&L isn't volatile. It's very transparent, very predictable. And so on the balance sheet, I give you $100 billion. What do you do with it? Well, you don't go and buy NVIDIA stock. You don't buy Tesla stock. You don't bet it on anything. You buy, short. You don't even buy long-term treasury bills. You wouldn't buy 30-year bonds. You would put it in a money market generating whatever, if you're lucky. At that point, it was 3%, but today it's 5.5%, and you take no interest rate risk and you take no market risk. So now what have you constructed? You've constructed like the ultimate predictable company with no uncertainty. So if you're an investor, you make one decision a year. Do I invest or not? And then you might do a quick check quarterly, but any volatility is probably negative. It's either, they outperformed, that doesn't happen that often, or they screwed something up. Well, that was conventional wisdom. 43,000 companies did it, and everybody with cash would basically buy T-bills short-term. And since T-bills short-term yield 3% after tax and the cost of capital is 12%, then that means you're losing 9% or 10% of shareholder value every year that you hold T-bills. And since people get that, the conventional view is buy your stock back.
The cost of capital, so people understand.
Yeah.
Is that the gap between inflation and...
Really, if you could get to it a number of ways. One way to get to it is actually look at the expansion of the money supply. And the money supply expanded maybe 7 or 8% over 100 years. And you could look at that and then you could tack on a risk premium. I need to get that plus a risk premium. the money supply has been, if that was the case, the risk premium is normally 4 or 5%. So you go 7% plus 5% gets you to 12% cost of capital.
But the cost of capital is the cost of holding that capital and doing nothing with it.
Yeah. Another way to look at it is the S&P index might generate a 10 to 12% return. And so if I have $1 billion, my option as an investor is just put it in the S&P index and get the 12% diversified kind of quote unquote risk-free equity return. So if the company is going to keep the money and they're going to invest it in a T-bill that generates 3% after tax, they should just give it to me. And even if I'm brainless, I just put it in the S&P index and generate 12% tax deferred. So that's the disconnect, right? You're destroying shareholder wealth if you're generating a tax deferred yield of less than 12%.
But that guaranteed, almost guaranteed 12% on the S&P feels a little bit scammy itself. How can you guarantee that? Like the 3% is guaranteed.
Yeah, the 3% is guaranteed. That is true. But over 100 years, the S&P has yielded 7, 8, 9%
on average. But you would have down years, right?
That's true.
Or do you not have down years?
But the decision or the opinion is in the eye of the beholder, or the truth is in the eye of the beholder, and the beholder is the investor.
Yeah.
So the outside public, if you go and you survey 100 institutional investors that invest in equity, and you ask them what is their benchmark, the benchmark is the S&P index, right? Like if the investor is returning less than the S&P index, all their capital would be called away from them. When an institutional investor goes to the Yale Pension Fund or the Harvard Endowment and they say, hey, I got 3% guaranteed in my T-bills, Yale and Harvard would say, you're an idiot. We could get 3% in T-bills. We pay you to pick companies that can outperform the T-bill return. Mm-hmm. And so if a hedge fund manager or an investor goes to his limited partners and says, we're generating the S&P return, then the limited partner would say, well, that's interesting, but you're charging me 2% management fee and 20% participation fee, and all you did was the S&P index.
I can do that myself.
There you go. So at the end of the day, I have $1 billion. I can either put it in the S&P index and get that and pay a fee of 9 basis points to State Street, or I can put it into the T-bill, take zero risk, get 3% after tax, and pay no fee. Or I can give it to you, Mr. Professional investor. So the professional investor says, I'm going to do better. I'm going to pick the 10 winners. And my proof is I got 18% return. The S&P got 12% return. But I kept 2% management fee. So that's 19 is 16. And then I kept 20% of my return, and by the way, some of them don't do that. Some of them are just mutual funds and they just take a 1% fee. But at the end of the day, the investor or the limited partner investor, the big boss at the back of the line says, what's my effective return versus the S&P index? And if you can do better than that, I'm going to give you as much capital as you want. And if you underperform that, I'm going to take away capital. So the benchmark in the modern era, since 1993 was SPY was launched. So the benchmark in the last 30 years is probably the S&P index. That is the effective cost of capital.
Right.
The limited partner puts that burden on the general partner running the investment fund. The general partner puts that burden on the CEO and the CFO, the management team that run Apple and Tesla and Microsoft. If you can't generate that return or better for me, my view is give me the capital back. So that means the limited partner takes the money away from the Bridgewaters or the hedge funds of the world. And then the general partner takes the money away from the corporations. And that just kind of ripples down.
But if there's increasing profits, increasing companies putting their money into the S&P as a way to almost guarantee their returns, are those investments in those companies reflective of their performance, or are they reflective of a safe haven and because it's almost like a guaranteed, it's like a self-fulfilling prophecy?
Yeah, well, now you're getting to like rational market theory. It's if you have active investors, they pick the winners. And out of the S&P 500, there's like 7 winners, the Magnificent Seven, and there's 493 losers or treading water, right? So if the active investors pick the winners, they overinvest in the winners perform better than the losers. If everybody just invested in the index, there would be no picking of winners or losers. That's almost just like a socialist communist idea. And that would be an example of the investment community stop thinking, right? Index investors, they don't think, they just buy, X% of 500 companies. And so the truth is the index strategy only works if you have actors who are activists in the market that don't index.
But does the index itself naturally lead to companies being overvalued?
Some.
Yeah.
Some companies will be overvalued. Some companies may be undervalued, right? So it's an example of an imperfection in the marketplace that creates opportunity. If everybody else chooses to index and you're the one person that doesn't, then it's like you're saying the emperor has no clothes. You guys are all invested in Kodak and Xerox, and you're not invested in Amazon and Apple. That's how the big tech investors could outperform the overall market. And again, if I step back and I'm looking at you as the activist investor, the way that I know you're thinking properly is you're outperforming the index. If you're underperforming the index, you're thinking poorly. And if you're outperforming the index, you're thinking properly. But let's come back to 2020.
Yeah, you came back to Bitcoin
right?
anyway.
So in 2020, we had half of our enterprise was in cash, and it was generating 0% yield. And it was very clear that if we wanted to actually have the success of Wall Street firms, we needed to have an asset. And the asset needed to generate more than the cost of capital. So the search is and the cost of capital jumped because in an environment where you print 40% more money, all of your assets have to go up in price 40% for you to keep parity, right? And so what did? Well, big tech stocks surged, real estate surged. So those things do surge. Cash doesn't surge. Owning a bunch of dollars weren't worth 40% more 3 years later than they were in 2020. So we went on this search and we considered art and real estate and buying the index and buying big tech companies. And there are regulatory considerations that keep you from just buying securities. You can't have more than 40% of your liquid assets in securities if you're a publicly traded company, generally. And so you can't just buy $500 million of SPY. And even if you did, there's then practical consideration, which is if you told all your investors, we just took all this money and invested in the SPY, their response would be, well, there's nothing special about that. That's the most conventional strategy you could pursue. A 12-year-old could do the same. Give us the capital back. So we discovered the idea of gold, and then we thought about it. We decided that digital gold would be better than gold. If we could get all the benefits of a non-sovereign store of value, bearer instrument that's hard money, and if we could combine it with all the benefits of Apple, Google, Facebook, Amazon, a big tech global dominant network, putting the idea of technology investing with the idea of hard money investing together in the year 2024, it struck us as being a reasonable strategy. And at the time, it was really the only reasonable strategy. We're either going to give the money back to the shareholders, and that's a fast death. Give the money back, decapitalize, have no assets, right? Once you lose your financial capital, you're going to lose your human capital. Because if you have no money on the balance sheet, and if your business has no volatility, the options have no value, stock options have no value, you can't overpay the employees, you don't have the cash. And so you're probably going to lose the employees, and then 3 to 6 years later, the product's not going to be competitive. So the fast death wasn't all that appealing. If you're going to do that, you might as well just sell the company. The slow death is sit on $600 million in cash, which we could run at an operating loss for 20 years with that much cash, but you're just waiting to die, right? It's like you're not going to beat Microsoft and Amazon and Facebook and Google. That's like holding up in your citadel while the army's outside. They're just going to starve you to death. And okay, I've got 7 years of food in my citadel, but while I'm sitting here and for 7 years, they're going to burn all my fields, dam my water supply and take over the rest of the world. And when I come out in 7 years, people will have forgotten me. So that's no good. So the last thing is you ride out of the citadel, you take a risk, pick sides, join the fray, take a decision. And at the time, the obvious team to join was Team Bitcoin. The obvious movement was the crypto movement, and there was a lot of risk, but the alternative was just either a slow or fast death.
You keep saying we, but it was really you, and you brought it to your team, right?
Well, I'm the catalyst, but the difference between an individual investor and a public company is an individual investor can think about it, maybe discuss it with a family member or two and make the decision. A private company thinks about it, talks to one major investor, 3 people in the private company, and makes a decision and tells nobody. A public company, you would have to persuade your entire management team, the CFO, the general counsel, the CEO, the head of technology, maybe. Then you have to get the consensus of the directors. So the management, the directors and the officers have to come aligned. Then you have to get consensus from the outside auditor, from the outside counsel. And after you consider those two, you have to get consensus of the outside public company investors. And the problem with the investors is at 9:30 in the morning, the investor base turns over, it changes. And by 4 p.m. in the afternoon, you have different investors. So you have to think really hard about how you communicate, telegraph, and build consensus with the investors. And so public companies are interesting creatures because on one hand, it's like a 19-legged race, fought, or something. It's a very intricate dance to build harmony across many constituencies that have asymmetric information, and they also have asymmetric priorities, right? The general counsel doesn't want you to get sued, right? The directors have a fiduciary obligation. There's a set of investors that think one thing, another set of investors that think a different thing. So you've got to balance all those constituencies, and that's the negative or the challenge. But the positive is when a public company does something, it does it big, right, in size. So when we finally did something, it was a $250 million acquisition of Bitcoin. And for me, I was like, I wanted to do 500 million, but 250 million was the compromise. And we agreed to buy back 250 million of our stock at the same time, kind of as insurance to give all of the shareholders that were concerned about the strategy, give them an exit at a profit. So that was our move. But in retrospect, of course, 250 million was like the largest public purchase of Bitcoin that anybody in the world had ever admitted to or the world had ever seen. There may have been larger public investments or larger investments, but we don't know about them and they're not credible.
About 12 of them from you.
Yeah, and then once we did that, then we were able to do the next one, the next one, the next one. So public companies are very powerful vehicles if you can align all of your interests. Just like countries are powerful, getting a country to get behind Bitcoin would be a very powerful idea. It's just you have a lot of constituencies. And so the exercise becomes one in diplomacy, politics, and consideration.
Are you surprised more companies haven't done it or done it to the scale you have? Because you've put the playbook out there. You've told everyone, you run your conference. I do it on a very small scale for my little businesses, and it's worked amazingly. For every single business I've had, I've done my small version of what MicroStrategy does, which is buy as much Bitcoin as I can. And it's protected and grown each business. But are you surprised that aren't more large public companies have gone, wow, we should have done that. We should be doing that.
I'm not surprised, and I'm not disappointed with what we've achieved in 4 years. I mean, I think there has been a sentiment shift throughout the Bitcoin community to look further in the future. I think there has been a positive sentiment shift in media, in the financial, television networks. It used to be people lamented nobody talked about Bitcoin, or they talked it as scammy. And I think we legitimized Bitcoin as an asset class with CNBC and Bloomberg and Fox. And I think a lot of private companies, got very heavily involved. I get letters from people that are private investors, and also everywhere I go, I meet somebody that says, "Oh, I watched one of your videos, and I finally got Bitcoin, and I started buying heavily." So a lot of private investors, a lot of families, a lot of private companies, and like my first podcast with Pomp, he always had this question. At the end of the day, he'd ask a question. He goes, "Do you?" And I watched his previous podcasts, and I noticed he always says, "So do you have a question for me?" And I looked at that and I thought, yeah, I'm gonna have a question for him. So in my first podcast with Pomp, what my first question was? Like my first podcast, my first question, and Pomp was the most influential podcaster in the Bitcoin space. I said,
that is debatable.
At the time.
Still debatable.
Okay. I thought.
No, you messaged me, and I was like, "Who is this guy?" And I ignored it, and then you went on Pomp, so I was like, shit.
Yeah, I mean, I messaged a lot of people the day we bought $250 million of Bitcoin, and like half of the OGs ignored me.
Yeah.
But I'm on Pomp's podcast. He says, "You have a question for me?" And I said, yeah, I noticed Jack Dorsey likes Bitcoin. He tweets about it. He seems to really appreciate the value of it. He runs a publicly traded company, Square. Do you want to join forces with me? And let's go ask Jack if he'll buy some Bitcoin. And Pomp goes, that's kind of interesting. And then a few weeks go by, maybe a month go by, and Square announced that they bought Bitcoin.
Yep, I remember.
And that was a game changer. I thought, at the point they did that, I thought, we're good now. We're going to win. Like that was the point at which I thought we're going to win. Two public companies took a position, and then when Elon came along and Tesla bought Bitcoin, that was three public companies, and perception of Bitcoin in mainstream media, I mean, it's crossed the front page of Wall Street Journal, New York Times, et cetera. So I think we accomplished a lot in those 4 years, but it doesn't surprise me that you don't see 100 or 1,000 publicly traded companies adopting Bitcoin as a primary treasury reserve asset in those 4 years, because I think the modern era, the institutional era of Bitcoin adoption starts January 2024, right? And I think what changed in January 2024 was the SEC approved 10 to 11 spot Bitcoin ETFs. And that started an avalanche. And I think today there's like 24. There's 22 last week, and there were 2 added in London or getting added. So we went from a perception that this was not an endorsed or legitimate asset class at the regulatory level. And someone could have said, I think the SEC is going to ban it, or they're going to deem it a security or something. And the world changed by the middle of January. And now it was clear that it wasn't going to be banned. And then at the same time in January, the accounting profession offered fair value accounting. They changed the accounting guidelines, and they made it optional starting in January and mandatory next January. So in a regime where it is uncertain whether the administration will deem Bitcoin a commodity or security, and they haven't definitively spoken, and in a world where the accounting profession requires that you adopt indefinite and intangible accounting. Indefinite and intangible accounting is the most toxic, prejudicial, discriminatory accounting treatment you can have. If I didn't want you to buy something or invest in something, I would give it indefinite intangible accounting, because that means you can only write it down. You can never write it up. And so you could have $15 billion or $150 billion of something, and it could be held on your balance sheet at $100. And not only can you not ever acknowledge it, all of your losses under indefinite intangible, they actually infect the P&L. So if a normal company bought $1 billion of Bitcoin and it traded down 30% and then traded up 150%, they would be showing a $300 million operating loss. Even though,
Well, the same happened with my business. I did one advertising deal. It was all paid in Bitcoin. It was a multi-year deal, 7 figures, and I took the deal because it was paid in Bitcoin. It was under the value I normally do. I normally accept. The price of Bitcoin was 42,000 at the time. By the time my year end, Bitcoin had dropped to below 20,000, and I had to pay taxation based on the value of the Bitcoin at the time I received it. And it was a big hit. I managed to survive it, but I nearly had to, there was a potential threat of selling some Bitcoin to pay the taxes at that time. It was a real threat to the business. We survived it, and now we've not sold any of that Bitcoin, but it was concerning.
If you look at the 42,000 publicly traded companies, and you went to a CFO in 2023 or 2022, and you said, I think I want to buy Bitcoin, they would have said, well, the accounting's a real problem. The accounting is going to, let me tell you how much of a problem it is. It's going to obscure all of your P&L and all of your balance sheet such that your EPS doesn't have any useful information anymore. And it means that any investor is going to have to reconstruct their own view of your business. So it takes financial reporting from something where I can look at a glance in 30 seconds and figure out whether you had a good quarter, to I have to spend 3 hours thinking about it, and so that's kind of a non-starter. So I think that we're late May. And the era of institutional adoption for Bitcoin started in January. And it's like if you went back to 1994, and we said, well, the first companies in the world rolled out their website in January of 1994, and now it's May of 1994, and we're sitting in a podcast, you're saying, well, Michael, are you surprised that more companies aren't, rolling out websites or don't appreciate the web? And I'm like, well, it's really year one. And give it 4 more years, right? Give it 10 more years, and you'll see that the consensus will be, of course, you need a website, just like, of course, you need Bitcoin.
And with Bitcoin, you found a place to park your capital. You found a place to deliver a better return. But you do also mention, you mentioned earlier during COVID, there was an inequity during the lockdowns where small yoga businesses closed down. And whilst you're obviously a very successful investor, I have also noticed you do have a lot of empathy. You do have you'd have an eye on the inequities of the world, whether it's caused by the system or bureaucracy. And so how do you manage those two different parts of Bitcoin? Because Bitcoin is a great investment tool, but it also is something that brings a lot of equity with it, a lot of fairness. Is that just like a beautiful marriage?
Yeah, I think that that Bitcoin it's an asset, and that makes it the ideal treasury asset. That makes it a solution for every corporation in the world, and every investor, and every family, every individual. It's also a technology, but it's a technology for human empowerment. Right. And, I think Peter Thiel pointed out that cryptography and giving strong encryption to the individual, it shifts the balance of power away from the corporation and away from the central entity, whether it's a government or a big corp, and it shifts it back to the individual, and that movement started with PGP, and pretty good privacy. And it was simmering. It just, and I knew it went on because a lot of people at MIT were very much into it. And one of my MIT friends, Simpson Garfinkel, wrote a book on pretty good privacy. And so I followed a little bit, but it was never an existential, I never had an existential threat, and I never had a mortality experience or near-death experience where I needed it to survive, right? So I started appreciating Bitcoin not just as an asset, but as a technology. And then once you understand the technology, how do you empower someone with whatever, all their money in their head or in their hands? And how do you empower someone to move all their assets from here to there without asking permission? that leads you to the ideology, right? And the ideology is based upon, a protocol that empowers technology, that creates an asset. But ultimately, the ideology is, self-sovereignty, privacy, individual rights, and the sovereignty of the individual, and also property rights and freedom. And I think that once I got involved, I started looking for a solution to a treasury problem. So I kind of got involved because I had an economic problem. And then in the research, it leads you to understand the technology and appreciate the combination of cryptography and proof of work and energy. And then once you start following all the Bitcoiners, you get drawn into the ideology. And then in the ideology, people start to cause you to question basics. For example, what is inflation? I would have accepted the party line inflation as CPI, and then as soon as you realize inflation is not CPI or inflation, and you can generate as many inflation metrics as you wish to generate, then you realize, well, I can just cherry pick any inflation, and so the best possible situation is to run an economy with 12% inflation while I convince the people that it's 2% inflation, because the cost of capital really is 12%. But they think it's 2%. And the difference of the 10% I get to give to anybody else I want, right? So every pension is indexed at CPI, so I'm raising your pensions at 2%. I'm inflating the money supply at 10 or 12%, right? And that leads you to question a lot of things. Well, if the inflation rate isn't correct, then maybe GDP isn't correct. How do you actually measure gross domestic product, if it's not inflation adjusted? And I think the CEO of Microsoft, made a point, a very quiet point no one noticed, which is, the economy is shrinking. It's not growing. In nominal terms, people will perceive the economy to be growing, but once you put in place the right inflation rate, the economy is shrinking. Nobody in the modern era wants to admit that their national economy is shrinking due to political policy. Well, that leads you to start looking at all these other things like PPI indexes. What does that really mean? And then what about unemployment? How can you have an unemployment rate of 2 or 3% when 45% of the people don't have a job? Like what's the definition of unemployment? Well, we only count people as unemployed if they wish they weren't. Huh? Huh? So all of these metrics that talking heads on TV, they argue about, they're all synthetic faux metrics, and you can build an entire world and a trading strategy and an ideology around synthetic, cherry-picked false metrics. Or once you discover Bitcoin, you start thinking, well, if the GDP's not right and the unemployment's not right and the inflation's not right, then what is right? And so I think that the Bitcoin opened that door for me, and it caused me to question a bunch of other things I'd taken for granted, and that leads you to read The Creature from Jekyll Island, and then it leads you to read everything by Murray Rothbard, A History of Economic Thought, and then you discover Austrian economics. And then it causes you to go back and you rethink all of history. Like I go back and I reread the history of the world. If you read Durant's Story of Civilization, he wrote 15,000 pages on the world. Most people didn't read 15,000 pages of world history when they were 18 years old. But if you did, you didn't understand inflation, and you didn't understand money, and you didn't understand politics, and you hadn't lived through a war. And so you misinterpret or you shallowly interpret what's going on. When you go back and you read history again, after you've lived through an actual war or a currency meltdown, or you live in 2020, right? You see one part of the economy being destroyed, another part of the economy being lifted up by the political action of a few people. And then you watch the media and you realize there's one set of media that doesn't even recognize there's a problem. And there's another set of media that takes a totally different point of view. And then you realize that news is just a curated stream of opinions. And if you wanted one set of opinions, you could watch one set of channels. If you want another set of opinions, you watch another set of channels.
But what do you do with this now? Because it's like anyone. You have your eyes opened. You question everything. But for you, what does that mean? What do you do with this now?
Once you realize that so many things that you took for granted aren't necessarily so, and it caused you to open your eyes toward a bunch of things in the world. Well, there's two responses you could have. One response is to note there's 100 things that are wrong with the world and start to complain about all 100 of them. And the other response is just to pick one single thing that you can do that might make a difference. And I'm of the opinion that I could complain about 100 things in the world that I disagree with, that I would talk about with you privately, but the world doesn't want my opinion and it doesn't care. And those things aren't going to change based upon me complaining about them. I don't have any real power. And I also think, I remember the words of Hayek. He says, you want to take money away from the state, you can't do it, in a frontal assault. You have to do it in a sly, roundabout way. Mm-hmm. So my view is, how do you fight, something which is so entrenched in the civilization that the harder you push, the harder it pushes back? And the answer is you have to introduce a new idea that will go viral. So, for example, Bitcoin, is a new idea. You could view it as freedom technology, a freedom virus. And you can also view it as a monetary virus to give sound money to the world. So if I want to give freedom and sovereignty and dignity and empowerment to 8 billion people, I don't loudly scream that their overlords ought to stop leaning on them. I'm not going to topple every government and every corporate overlord and everything. So what I do is I introduce a new technology that spreads virally. And if I want to give property rights to 8 billion people, I introduce a new technology. And when you introduce a new technology, there's a right way to do it and a wrong way to do it. I think when you say, you're wrong, you're stupid, I'm smart, do it my way, change your way, right? The louder you say that, the harder someone pushes back against you.
That's like parenting.
You create inflammation.
Yeah.
Right? And there are examples in our political system where certain political parties, their position is the other party is wrong, we're right, they're stupid, we're smart, do it our way, and give us credit and blame them. Right? And so that's an inflammatory approach. I think that you could spend $100 billion trying to jam your idea on someone that doesn't want it. They will just crowdsource $100 billion of power to push back, and that's called fighting a war, right? You're just going to war. I think that the more elegant way is to introduce a new idea, Bitcoin. What is it good for? Oh, it'll be good for your family. What else? It'll be good for your company. What else? Oh, it'll help your bank. What else? It'll help your state. What else? It'll help your city. It'll help your country. What else? Oh, you want to fight a war? It'll help you win the war. You disagree with X, it'll help your political party. You want to win an election, it'll help you win, right? What is Bitcoin? Bitcoin is good for you, right? Bitcoin is empowerment technology that will allow you to be the best version of yourself. Who's losing? Nobody's losing. Who's wrong? Nobody's wrong. Just everybody's just better with this. Is better living through technology. And my approach is, I think about the one thing that can make the world a better place. And I think about the one thing I might accomplish. Like I don't think, like MicroStrategy spent $7.5 billion buying Bitcoin. I don't think that if we spent $7.5 billion on the next 100 things you think are wrong with the world, I don't think it'd make a difference. I think that you would just spend the money, and the counter side, the other opposition, would spend an equivalent amount of money to negate the amount of money you're spending. So I don't think you change the world through full frontal attacks, and I don't think you change it through aggressive confrontation. I think you change it through elegant, diplomatic innovation, and that's my observation. If I look at the history of the world, the people that made the world a better place, the people that introduced steel, electricity, antibiotics, the smallpox vaccine, aeroplanes, steam engines, internal combustion engines, motors, Starlink. These are all very elegant things, and they're non-controversial at the end of the day. Maybe early on people are afraid of new tech, but if you look back and you say, well, just give me an example of someone that righteously opposed electricity, who history deems was on the right side of that, I think generally history views you on the wrong side of technical innovation. And so you'll win over time if you want to change the world with technology. Technology is bipartisan. If you want to change the world with religion, or you want to change the world with ideology or politics, or you want to change the world with critique, or violence, I think the world has a way of pushing back. And so I guess I was just practical, and in 2020, what started as how do I save my own company became how do I actually do something good for my shareholders, right? I started with a defensive strategy almost out of desperation. It's either this or throw in the towel and we're out of business. And then it became, opportunity. I can make money for my shareholders. We did it when the stock was $120 a share, and then when the stock gets to $300 or $400 a share, we think, well, maybe we can keep doing this. And then it became wait a minute, there's a lot of other people. There's 400 million people in this crypto community, and they actually like Bitcoin. And there's hundreds of millions of people that own some piece of Bitcoin, and they love it. And then there's the Bitcoin maximalist, and they think that's an instrument of economic empowerment. They think it's going to change the world for the better, and they don't want to live in a world without it. Why do they, and so getting drawn into the spiritual side of Bitcoin, it came later, right? I mean, I realized there are a lot of people. I mean, Jack Dorsey maybe being the most famous of these people, that clearly they were motivated by spiritual drivers and spiritual motivations more so than by monetary. He didn't need to do Bitcoin to save his company. He was a big tech billionaire success. I did, and on the other hand, it's not bad that we both had different motives, because my motive was save a zombie company. Guess what? There's 30,000 other zombie companies, and there's 300 million corporations in the world. They're all in the same boat with me, right? So my motive was one direction. His motive was a different direction, but I eventually ended up appreciating him and that spiritual element, and discovered the GGs of the world, and all of the Bitcoin believers through podcasts like yours and the like. But I think he ended up appreciating what we were doing too, right? It's after MicroStrategy that Square buys Bitcoin, and then it was just a month ago that Square announced that they would start buying Bitcoin every month, right? And there is a role for corporations, in this as well. So I think that we're all evolving, and my journey kind of went from one economically motivated to then one spiritually motivated, and then I started to see the ideology, right? And if you want to fix there are serious problems in the political system of the U.S. There's dysfunction. And there's serious dysfunction in the EU, and there's serious dysfunction in China, and there's some serious dysfunction in South America, and probably you'll find some serious dysfunction in Asia, right? And then we could tack on a little bit of serious dysfunction in ASEAN and New Zealand and Australia. And I'm not going to talk about it, but I think we all know that there's some serious dysfunction. I think that the answer is not to side with one party against the other, or to blame one party, or to celebrate one politician as the savior. I think the solution is to spread the orange wave, right? It's the orange solution, which is every political party, every politician, every movement will find that they will be the best version of themselves. They will be more effective. They will be more ethically grounded. They will be more technically grounded, and they will be more economically grounded in pursuit of their mission if they embrace Bitcoin and the Bitcoin standard. And so that has become, the primary driving force of my life right now. And I use the Saylor Academy to promote Bitcoin education, and we've done courses in Austrian economics, and courses in Bitcoin for developers, and courses in Bitcoin for everybody, and courses in monetary history. And we do our best to educate the world in that mission. And at MicroStrategy, we've tried to set an example for a company on the Bitcoin standard, and not just do the minimum, but actually show how you can adopt a Bitcoin development strategy, and you can grow the network through financial activity, like issuance of equity and debt and securitizing the network. But also, we do our best to do our Bitcoin R&D projects. We have a Lightning project. We have our Orange project. We experiment, working on layer 2 protocols that might be helpful. And then I get calls from CEOs, and I spend a lot of time. My best experiences are when I have a CEO of a publicly traded company, and they'll say to me, "I saw what you did. Tell me how we could do it." I'm like, "Okay, let me tell you." And I'm like, you want me to talk to your board? You want me to talk to your management team? Here's everything we did in Vegas. You want to talk to, all of our custodians, all of our traders, blah, blah, blah. This is what I can help with. And I think that there's a movement afoot, and we can see, even as of this week, there's a sea change, and there's just a broad worldwide consensus that we need something different than the ideas of the last 30 years. We need something new, and that manifests itself in a groundswell of support for Bitcoin, a groundswell of support for crypto, a groundswell of support for digital assets, and a new way to see the world on Wall Street, on Main Street, on Capitol Hill, in Europe, in Hong Kong and London, et cetera. And so this is maybe the most exciting time, in my life, and maybe in the history of Bitcoin. I think it's a pretty exciting time.
Yeah, but all this, and look, there's been some complex computer science problems solved with Bitcoin, and Bitcoin technically is complex, but the idea itself is quite simple. It's a fixed limit currency of 21 million with a known issuance rate. It's a very simple monetary policy. I know you have a background in systems design. We interviewed a guy called Nicholas Bowick, who reached out to me. He's never been on a podcast.
I listened to it.
Yeah.
I loved it. He's great.
I mean, and
aeronautical engineer.
Honestly, he was great.
Aeronautical engineers.
But you have a background of understanding systems design. What is it about Bitcoin that enables it to do so much? Is it bringing balance to the world? Is it this kind of yin yang to a financial system where they've tried to force stability?
I think it's the 3 E's. It's ethics, it's economics, and it's engineering. It's sound ethics, sound economics, sound engineering. And in ethics, it's this idea of a fair ledger and a fair asset. Satoshi created a way, Satoshi gave it away, Satoshi went away, right? If you want the roadmap for an ethical launch of a decentralized digital commodity, an open protocol for anything, it's you create it, you give it away, you disappear, right? And Prometheus is not standing around taking 10% of the revenue from fire, and suing you for patent infringement a million years after Prometheus gave us fire. Just create it, give it away, go away. And so that idea is a very profound idea, because you think about how many corporations and governments in the world where you have the bringer of truth or the bringer of the solution, and they want to stick around and benefit from it, right? And so I think Bitcoin sets that example. And the second thing is it's economically sound, right? You can create in theory, a digital commodity that's inflationary. It's like, I can create and give away a protocol that inflates 5% a year, and I can go away and disclaim beneficial ownership, but it's still messed up. Like, it's still defective. Like 5% a year means it just keeps inflating. So this simple idea, which is such an elegant idea, pick a number, don't change the number. Right? It's like the number 9 has stood for 9, right? 1, 2, 3, 4, 5, 6, 7, 8. There's got to be a certain number. That is the same. It's not changing next year. No one gets to redefine it. There's no debate over it, right? 9, right? It is a permanent thing. How important is it? Well, every machine in the world works on it. Like, every computer in the world works. And if you actually want to warble 9 to be 9.5 and 9.25, and if you want deflection on the idea, it destroys the machine, right? The reason that we use steel is it doesn't deflect. The reason we use math is it doesn't deflect. So this idea of a fixed number that nobody could change, that no corporation could corrupt, that no politician could corrupt, that no political movement could corrupt, incredibly powerful. And then the last idea, sound engineering.
Well, also, only computers could deliver. It couldn't have been done in an analog world, even with gold.
Yeah. The idea of Bitcoin, you couldn't execute perfect money until you had the modern internet, modern computers, modern semiconductors, right? Modern cryptography. So you needed a combination of technologies and in order to execute this idea. And there are a lot of good philosophers and Austrian economists, but the struggle they had is maybe they had the right idea, but the technology was not up to implementing an ideal notion. Just like you could be a great doctor, but like before antibiotics and before you had a microscope and before you understood germs, there's a limit to what you can accomplish. So it's the instrument. One of the themes of scientific history is, until the telescope, we couldn't see the moons of Jupiter. Until we couldn't see the moons of Jupiter, we couldn't figure out that Kepler's laws made sense. And you would never have determined that the Earth was revolving around the sun until you had the telescope. And so an instrument allows you to prove, to break a paradigm, and the paradigm leads to Newton's laws. And that leads to the calculus and the calculus of variations, and then the entire modern world changes. And the same is true with the microscope. So a technology, an instrument, gets sufficiently good enough that it breaks the paradigm. Oh, germs. Maybe not bleed people to death, right? But it all kind of starts with things like grinding glass into optics to see a very small thing or see a very far away thing. Now, and Bitcoin, it required PGP. It required the internet. It required chips, not analog chips, digital chips, right? And semiconductors and CPUs. So that being the case, right, the third prong of the Bitcoin stool is engineering. And the thing that's beautiful about Bitcoin is it's a balanced, stable, engineered system. But the way you get there is by combining energy, electricity, and something thermodynamically scarce with hardware, with semiconductors, with software, right? And with cryptography. So there's like an element of math and cryptography and there's an element of semiconductors, and you're running them with electricity. When you put all three of them together in an open protocol, then what you have is something which is stable that spreads virally, and eventually you get, the ASIC wars. And then what happens is people build big Bitcoin mining centers, and everybody thinks, oh, that's bad, that's centralizing. But of course, the mining centers suck up so much electricity that they eventually have to run to the edge of the grid, and they're always running away from the center of civilization to the person that has the stranded energy, because you need almost zero cost energy. So what does that do? Well, that creates a phrase, balance of power, right? I mean, which is, kind of, it means a lot of different things, but we need a balance of power for the system to be stable. And how do I make it unstable? I take away the hardware component. If I go to proof of stake, all of a sudden your balance of power means, well, I don't need $5 billion a year of electricity. So that means people that have electricity are not actors. And I don't need hardware anymore. And that means that that there's no inertia from the hardware. And now I just need a software node. And now, of course, all of those nodes can be running in the Amazon cloud, or they could collapse down to 27 computers in one city. And you wouldn't know, and B, you wouldn't care. And so the system becomes very, very fragile. Aeronautical engineers are very sensitive to this. One of the reasons that they like Bitcoin, I think, is in an aircraft, you have to consider all these factors. The shape of the aircraft matters, but the avionics matter, but the balance matters, but the conditions matter. And when you design the aircraft, someone goes, yeah, I just want to change the couch. You want to change the couch and put a different couch in an aircraft. They might charge you $96,000 of engineering to actually run the weights, the balances. They got to consider, will the couch catch fire? In the event of a crash landing, right? Is the couch rated for 16 Gs? Or will the couch break loose and kill everybody? Et cetera. And so you have all of these second order, third order, fourth order concerns in aviation and aeronautical engineering. And you don't really have those concerns if you're just a hacker. And so people that are computer programmers, they just write code, it works, their world is very simple. But people that build spaceships, and people that build airplanes, they actually have to consider a circumstance where one system fails, one system gets jammed, there's a storm, there's wind shear, and all of those things are irrelevant except in the last 15 seconds of the flight, when they're certainly going to kill you. And they have to design the system such that in the last 15 seconds of the flight, if such and such happens, we don't all die.
But Bitcoin's similar to that. Austin Hill said this to me. He said the engineer of Bitcoin needs to be like aircraft engineering or rocket engineering, in that you cannot have a catastrophic failure. A catastrophic bug, I mean, look, I know Bitcoin's had it in the past, but a catastrophic inflation bug could be terminal for Bitcoin.
Yeah, I totally agree.
Yeah.
I totally agree. The more you know about engineering, and I think the more you know about economics, and the more you know about ethics, the more conservative and the more considerate you become about any change to the protocol. Like you radically change from proof of work to proof of stake. It's not just an engineering lapse where you centralize and you make the system unstable. It's also an ethical lapse, because now you've actually created a staking network and you converted a commodity into a security, an investment contract, and it's also an economic lapse long term, because you have destroyed part of the free market that was supporting your network, right? You've just nationalized $20 billion worth of mining rigs and seized them. And now you've just disincentivized any miner from ever investing in your ecosystem ever again. And you've disincentivized anybody else. If a government seizes $10 billion of your property, you want to invest money in that country? right? So it's an economic disaster to nationalize property, and it's an ethical disaster to steal from somebody or to seize control of what should be a decentralized network or a commodity network. But also it's an engineering disaster because you've basically taken something which is anti-fragile, nearly indestructible, that is guaranteed to get more secure technically over time, and you've converted it into a bunch of software running on a server, and you're hoping that the 5 people that control the updates don't get compromised. Right? If I get control of the people that control the code that release or unrelease staked assets, that's a problem. But you could shut down all Bitcoin development, right? And arrest every single developer. The miners are going to keep working. And someone would spin up a new development group in some other country, and start to work from where we left off. So I think that engineers, system engineers, are just naturally very they're very thoughtful, and they want to create self-stabilizing systems. For example, you design an airplane, you put the wings down like this, it's unstable. Okay, it'll spin fast, but that means it'll go into a tailspin or a death spiral, crash and burn, if you lose control of it for 50 milliseconds or 100 milliseconds. That's a very dangerous machine. You need very complicated software. If you design the plane with the wings swept up like this, when it turns like this, what happens is this wing loses lift, this wing gets more lift, and it wants to come back to center. Just like why are ships designed with a certain hull shape? Because when it goes like this, you want it to swing back. Why don't we put a big weight on top of the ship, like over the mast? Because when it goes like this, it wants to capsize. So ocean engineers, civil engineers, aeronautical engineers, mechanical engineers, they know that software is useful, but software is not all the end all be all. Right? It's your relationship to the laws of thermodynamics and the laws of gravity, right? And Reynolds law and viscosity, and it's your relationship to Maxwell's equations and electromagnetics, et cetera. Those things determine whether you crash and burn and sink. And if you've got a stable vehicle or a stable network, yeah, you can write some software, and maybe you need some software, right? I mean, I need software in an airplane, and you can, and well done, software makes it safer. But when the software engineers get out of control, like on the Boeing 737 MAX, and someone says, well, we have to upgrade the software and we have to do the latest, greatest, right? And let's just go ahead and get the update out. The result is the software actually overrides the human, makes the plane unstable, and crashes the plane and kills everybody. And maybe it kills the entire company.
I mean, that also, wasn't that a software hack to solve a problem whereby they wanted to upgrade the plane for bigger engines, but they didn't want to upgrade the hull? I can't remember what part of the
fuselage?
Yeah, the fuselage. They didn't want this. And so they ended up, it was a hack really, wasn't it? But it's again, it's come back to systems engineering. They tried to hack around what they should have done, which is build a new fuselage.
I'm going to tell you two quick stories. One is if you look at the 737, it was designed in the late 60s.
Yeah.
And the shape of the 737 and the style of it, once you have a fuselage design, you've worked that out in a wind tunnel and that's stable. You can generally make it a little bit longer without having to redo all the engineering. But if you make it wider or change the shape, every single assumption gets thrown out the door. Change the shape of the fuselage slightly, the plane crashes and burns, and it becomes a $10 billion or $100 billion exercise to do a new plane. That's why the 737 didn't change for 40 years. The Gulfstream 5 is based upon the design of the Gulfstream 4, based on the design of the Gulfstream 3, based on the design of the Gulfstream 2, which is a 70s aircraft. So for 40 years, the Gulfstream didn't change. Global Express, same thing. You don't want to change these airplanes. And that teaches aeronautical engineers to be humble. It's like, yeah, I've got this new idea. It will look cool. Let's just add this one thing. But the one thing might very well just kill everybody. And so you become very thoughtful, careful, humble. One more observation. This is a funny one, but I had a chance to go on a tour of the U.S. military, the DoD, and the same tour that all the generals take when they first make general. And they would take some VIPs, and they would take you to the Pentagon and show you how they fight wars. And then they took us to show us the ballistic submarine pens, and we went into a ballistic nuclear-powered submarine. And then they took us out to Camp Lejeune, and we saw Marine amphibious invasions, and then we saw Air Force Special Ops, and we went to Fort Hood, and we saw, tanks, and we got in tanks, and we fired the tank, the tank artillery, and learned what it was like. And then they flew us out, and we landed on an aircraft carrier. I landed on the John Stennis, which is a nuclear-powered aircraft carrier in the middle of the Atlantic, in a cod, slammed down, got off the carrier, and I'm walking around the aircraft carrier. And they give us the VIP, and they take us to the Combat Control Center, and they take us, all through the carrier. And then part of the tour is they take us to a room. It's about as big as this room, underneath the landing deck, underneath the flight deck. And literally, it's like the planes are landing 8 feet above your head, and they're slamming, and you would sit in the room, and you could hear this jet, an F-14, slamming down, on the jet of the aircraft carrier. And what's in the room is a long cable, and there's a little black and white television, closed circuit TV, black and white TV. And there's 3 naval enlisted people, seamen, and the one of them has a clipboard, and the other one is staring at the television, and the third one is standing next to a big crank. So they stare at the television, and I can see the airplane coming on approach, and it slams on the deck. Bam! You could hear it. Guy goes, Mark 3. And the next seaman goes, Mark 3, check. And we wait, and I'm with an officer, like a pilot, and he's showing me around. And I stare at it again, and in 60 seconds, you see a plane coming down and slams into the deck. You can hear the entire room rattle. And the seaman goes, Mark 4. And the next one goes, Mark 4, check. And the guy with the clipboard does a check. Okay. And I say to this guy I'm with, the officer, I said, what are they doing? It looks like they're just counting landings off of it's like 2 people or 3 people to watch planes slam into the aircraft carrier. He's like, yeah, that's what they're doing. And I said, really? He goes, yeah, they're going to count to 100. And when they get to 100, that guy there is going to pull that crank, and this cable is going to rotate. They're going to replace the existing steel cable. The cable is the tailhook cable that winds up to the deck. And when that plane lands, the tailhook would catch the cable. Yeah, and it would keep the plane from crashing into the ocean. And I look at it and I go, well, isn't this something they could computerize? You would think a computer could count from 1 to 100, right? And then just rotate the cable. And he goes, yeah, a lot of people think that, but this is the way we've done it since World War II, and it's never failed us, right? And it's in the greater scheme of things, the people aren't that expensive. They're making minimum wage. They're like, first term of duty, 19-year-old airmen, and there's triple redundancy. And if they screw that up, if that system failed, the pilot's going to die. It's going to be a $40 million disaster, and maybe it's a disaster for the entire, multi-billion-dollar carrier. So this is just the way we do it, right? And it just shows you how conservative people can get, and I could give you 100 examples like that in the military, where if there's lives on the line and there's a lot of energy and a lot of power, sometimes the supercoder might not be the right solution. You might not want to trust your life to a piece of software that might get fried.
I think conservatism is making a comeback in all aspects of life. I think people living in New York and San Francisco want a little bit of political conservatism. So I agree with you there. So let's touch on it, because there is this perception. Maybe it's right or wrong, but you'll tell me. There is this perception that you're keen on ossification, and I was chatting to you last night, and I said, I hadn't actually heard you use the word ossification, but my discussion with Danny was, I don't think Michael wants ossification whereby the code is frozen, which, by the way, probably can't be done. But I think I said it's probably more like a stalemate where it's very hard to get things through. And we're at a time where there's like a new guard of Bitcoin developers and an old guard of Bitcoin developers. The old guard's very conservative, and the new guard is wanting to move out of the way because they want to do things, they want to build things, OpCat and various other things. I'm certainly in the world of being more conservative, but there is this perception that you're keen on ossification.
Yeah, I don't know where that started, because I've never used the word ossification. I've never even discussed the issue. I've never tweeted it. I've never mentioned it in a podcast. I think if you were to ask me my opinion on Bitcoin development, I would say considerate and conservative, right? And I think that there are a lot of people in the Bitcoin community that have well-considered proposals. I've listened to your discussions with Steve Lee and with John Carvalho, and I think there are a lot of people, and with Bitcoin core devs like Gloria Zhao, and I think that they're very considered, very responsible. I've been a big supporter of the Bitcoin Security Initiative at MIT, and I think generally my view on this is Bitcoin is an extraordinary protocol, maybe the most successful protocol, the most important protocol in human history. Certainly, it's up there with base 10 math and English and the like. So, I think the Bitcoin protocol is very important. I also think that we ought to prioritize integrity. You said, am I in favor of Bitcoin ossification? No, but am I in favor of Bitcoin integrity? Yes. Bitcoin security? Yes. Right? Bitcoin stability? Yes. I definitely believe in stability. Like, do I think that the numbers 1 through 9 are stable? Yeah. If you want to call them ossified, we could debate it, but I think it's an irrelevant thing. I think ossification is a straw man put forth by people that have a progressive proposal. And if someone says, hold it now, let's think about it, right? They can say, well, you just don't want to change anything. Well, I mean, the truth is, I think it's a mistake to presume that you have to change the protocol in order for Bitcoin to be successful. I think there's a lot of software. I mean, you have to write software to make the nodes run. You have to write software to make the Bitcoin mining work. You have to write software for the wallets. You have to write software for communication. You have to consider bugs in the software that might prevent the nodes from coordinating, right? There's a lot of software to consider, and if someone wants to write a full node Bitcoin that runs on the iOS versus Android versus some new operating system versus whatever, right? I think those are all reasonable considerations, and we're going to write software. I even think there's a place to write software to check the network, right? Is the network healthy? To monitor the network. And so I'm not against software. If you said to me, there's a contingent of mathematicians that want to introduce a new integer between 7 and 8, I would think let's be considerate and conservative in that, and let's consider what we're going to break.
Right. Okay. So you could almost like partition this between what is opcodes and expansion of what the protocol can do versus when, like you said, integrity and security, protection of the network from catastrophic failures, attacks, hacks. Are you seeing those as two different things? It's It's not that you want conservatism around, much more conservatism around the expansion of what the protocol can do.
Defend the network. Don't F with the network. Make sure the network is healthy. Don't introduce risks, unnecessary risks to the network that might infect it with a disease.
But any substantial change, there'll always be some risk. I mean, we saw that with Taproot, right? With Taproot, we made it a lot easier for people to put inscriptions. And that was an unintended consequence. Was that like a warning shot for you? Was that what made you think about this?
Everybody's Bitcoin journey is different. I mean, I didn't really start thinking hard about Bitcoin until 2020, and my focus on Bitcoin was the asset, the economics, the adoption throughout the rest of the world. And if you look at all my writings and look at all my podcasts, you won't see that I ever took a public position on Bitcoin development, Bitcoin Core, SegWit, Taproot, or the like. And in fact, SegWit was before me, before my time, right? During, as a resolution to the block size wars, or at least an outcome of, right? It was an artifact of the block size wars. And I just accepted it as a given. And then Taproot took place early in my Bitcoin journey, and I didn't really focus on whether it was risky or not risky and good or bad. I think I'm only now getting to the point where I start to think hard about the philosophy of Bitcoin development, and I think that's appropriate. Wait 4 years, study things, think about it, because maybe your opinion when you first get started might be modified by some experiences.
Just to add to that are you having to consider how much people listen to you in the way of opinions you might have? If I have an opinion, a certain number of people listen to it. If you have an opinion, a lot of people might listen to it. And do you feel the weight of that?
Yes, I do feel like there's a responsibility. If you're a leader in the community, don't create inflammation.
Yeah.
Like you can have 100 opinions privately and share it with your circle of trust. And you may or may not be, you may be right, you may be wrong, but that's how you learn. So I think being private and considerate and exploring your opinions and developing an opinion is reasonable. But if you just go on Twitter and start spouting 100 definitive opinions about 100 things, what's certain is you probably aren't the expert in each of the 100 areas, and you probably don't have the most invested in each of the 100 areas. So generally, you just enrage a lot of people who know more or who have a lot more invested in it. So I think you ought to wait until you've actually gathered enough information and you have a point of view which is considered that's worth sharing. So that's why, I mean, if you look at me on Twitter, I don't engage in the debates over, this proposal or that proposal, and I might have a private opinion about it, and I've expressed private opinions that I think we should be careful and very conservative. But I don't then convert that into, and therefore that means you should not support this or you should not do that, because the devil's in the details. Let me just make a point about philosophy, though. The Bitcoin protocol is the essential governance. It's the government of Bitcoin, the nation. If Bitcoin was a nation, the protocol is the body of laws that govern the nation. And the protocol has no statute of limitations. So for all practical purposes, when you put something in the protocol, it's like writing a law that might very well last 1,000 years. So that being the case, if you ask me what is my philosophy about politics, I'm in favor of small government, not big government. I'm in favor of less, not more. I'm in favor of free markets, not central or not government mandated agencies. If there's a choice between should the government do it or should a corporation or a free actor do it, I think the government should stay out of it. If a bunch of people come to the nation's capital and they have 100 ideas for 100 ways to make government more beneficial to you, and they want to help you by giving you government mandated food and government issued education and government issued fill in the blank, I'm fairly skeptical. And I actually admire politicians like Reagan that said government isn't the solution, government is the problem. And how about an initiative where you make the government smaller, not bigger? Right? And of course, lobbyists and politicians, they think government is the solution of everything, and they want to intervene in what you say, what you eat, your medicine, how you raise your children, how you educate, how you travel, where you can go, and in the extreme, the government might tell you you're not allowed to have Thanksgiving dinner with 6 people in your family or sit more than 6 feet away from someone, and so in your own private home. So I'm in favor of small government. And in the same way, I'm not in favor of big protocol. I'm in favor of small protocol. I'm in favor of do the minimum. If you believe the government should do the minimum to control your life, you believe that the protocol should do the minimum, because it's very hard, to reverse this. And if you look at the history of civilization, every empire starts small and struggling. It's the underdog, and you're trying to struggle to live. And then at some point they win. And when they win, they conclude that they're the most virtuous, and then they get rich. And then when they get rich, they start creating more laws, and those laws get to be ridiculous, and they create inflation, and they create regulation. And I think most people in the Bitcoin community are against inflation, and I think we're against regulation. And the whole irony is Bitcoin is a technology to escape the vices or the oppression of inflation and regulation. So why would we want to encourage inflation in the protocol and regulation in the protocol?
Sorry, can you define inflation in the protocol and regulation in the protocol, just so I understand the analogy?
Yeah, I mean, if I dump another 1,000,000 lines of code that does when I'm adding functionality and performance and scalability via features, and I'm writing all this code, I'm creating inflationary dynamics in the protocol. What is inflation? I'm devaluing something else, whatever that else is. I might be undermining the security. I might be undermining the simplicity. The protocol is encroaching on the free market. And I won't say in all circumstances changes to government encroach on the free market. You could actually, in theory, pass a law which shrinks the government, right? You could make changes to the government that makes it smaller. But I guess I would say I'm not in favor of any law, because some laws make government bigger, and they're inflationary, and they're regulatory, and they're oppressive. Some laws might make government smaller and more efficient and more effective. And so I would consider any law. Code is law, right? When you write code, you're just writing a law in cyberspace, right? I mean, software developers are the lawyers of cyberspace when they write law. And, it's one thing. You write code for your application, like Cash App. It's a layer 3 app. You're risking your shareholders' money and your corporate credibility, but you're not going to crash the Bitcoin network. When you write code for layer 2, you've got to be a bit more consensus driven, because now there's 100 or 1,000 other companies that have to work with your Lightning or work with your whatever, and you have to go 100 times slower. But when you write code for layer 1, the protocol, like either you're in different stages. In the first few years of Bitcoin, it wasn't sure it would work. You had the catastrophic inflation bug, and you have to move fast and take risks. And you might destroy it. I mean, most of the early protocols were defective. I mean, there's a 99.9% failure rate. But in this particular case, Bitcoin survived, and they took that risk and they survived. And yeah, Satoshi changed a lot of stuff fast, but Satoshi was risking $1 million or $10 million. Today we have $1.4 trillion, and we are in the third stage. I think the second stage was like the block size wars around then, where there was something very valuable and there was some serious issues to be worked out, and you had multiple camps, and the protocol did suffer inflation. SegWit was inflation. The big blockers would have been more inflationary. So there's a lot of regulation, inflation that was introduced.
How was SegWit inflation?
It took the block from 1 megabyte to 4 megabytes, right? It created all that extra block space, right? So you could do things with SegWit that you couldn't do before.
But some would argue that that was good for Bitcoin. I think it was good for Bitcoin.
It wasn't necessarily good for the Bitcoin miners, right? The point is, if you increase the block size and you change that dynamic, it's not clear you didn't bankrupt a bunch of Bitcoin miners that would still be in business today. So, we can go back and forth, but it stands to reason that when you add functionality or scalability or performance, you're actually depriving someone else in the ecosystem of their property rights, of their opportunity, right? And so, a perfect example, like if I took the block size up by a factor of 10 and transaction fees fall by a factor of 10, right? There's someone on the other side of transaction fees, they've just had their revenue destroyed, right? And so that is inflationary, and it inflates. It'd be obvious if you just took 21 million to 42 million. That's first order inflation. But when you increase the bandwidth from 1 megabyte blocks to 4 megabyte blocks, that's second order inflation. If I take the transaction bandwidth up by a factor of 100, that's hyperinflation of the bandwidth in the second order. That would bankrupt all the Bitcoin miners. And so if you bankrupt all the Bitcoin miners, there's an ethical lapse, there's an economic lapse, and there's also a thermodynamic or a security lapse. And not only are you depriving the Bitcoin miners of their property, you're also depriving the Bitcoin holders of their security, and you're undermining the political stability, the economic stability of the holders as well as the miners. And you're doing it maybe to create fast blocks or more bandwidth.
But there's been a lot of work that's been done to make transactions more efficient, blocks more efficient. So is all that work inflationary? Are they all is that is all that depriving the miners?
I think the ethical line here is, if the free market does it consistent with the existing protocol, then that's just a Darwinian evolution of the free market. Like if people all decide to use Cash App and do lightning transfers between Cash App and Coinbase, and we didn't change the protocol, there is a decrease in transaction fees. But the point is, you didn't jam it into the protocol against the will of everybody in the Bitcoin ecosystem. It was a natural artifact, right, of the free market. And I think that the free market naturally will create more efficient companies and more efficient layer 2 protocols, and they will scale the network. They are scaling the network, and that is a risk.
But you don't believe we're done scaling at the protocol level, do you?
Well, let me come back to this. When I invested $1 billion in my Bitcoin mining rig, I accepted the risks of the existing protocol. When someone changes the protocol so as to bankrupt me with a protocol change, right, they have actually deprived me of my economic rights and introduced a risk I didn't sign up for, right? That's the ethical distinction which converts something, in some cases, from a commodity to a security, right? If a government, if I go into a country and I invest billions of dollars in a Bitcoin mining rig and it's legal, and then the guy wins the election and changes the law and makes it illegal and seizes all my Bitcoin mining rigs, right? That was an ethical lapse, right, at the governmental protocol level. So if I go and I invest in Bitcoin mining and then a bunch of companies launch some ETFs and all of a sudden the transaction fees go to zero because companies launched an application on layer 4 of the network, the free market bankrupted me. But a protocol developer didn't. So the point really is...
But hold on, sorry, I do want to challenge this because I don't think you... I think when you sign up, when you put $1 billion in, I think you're signing up to a protocol that has a developer community that does have changes. That's something you accept. You can voice opinion that you want it to be conservative or not change. But we do want the protocol to be more efficient at a protocol level. And, we have had important changes. BIP 16 that brought in multi-sig. We've dealt with transaction malleability. We have had SegWit that brought Lightning. I think these changes are always going to come. And I'm with you on the conservatism, but I still think changes to the Bitcoin protocol is the free market. Because it's never one developer who can change things. Look, we've seen developers want to bring things in and they've just haven't managed to get the consensus from other developers. It has to go through social consensus. For a soft fork to get approved, miners have to signal. So isn't that the free market deciding that they want the upgrades?
I don't see it that way. I see it as I'm a lawyer. I go to London. I lobby a politician to pass a law making it illegal for soccer clubs to operate in Bedford. And in response, the lawyer passes the law because I gave him a campaign donation and I explained how I wanted to turn Bedford into the next Disney World. And it's going to bring jobs at Disney. And I think that you would be irate if a lawyer or a lobbyist was lobbying for laws that impact your family, your business, your friends, and I would be like, oh, it's just the free market. Okay, I went to DC and I got a law passed that made the pipeline illegal. Oh, who paid me to get the law passed? The other pipeline. So there's one guy that's got $50 billion because he's got the only pipeline, and the second pipeline was shut down by some lobbying in DC. I view that as corruption. And so I think that if you're able to deprive some economic actor in your nation or your network of billions of dollars or millions or hundreds of thousands or trillions of dollars of economic property rights by lobbying to actually change the law, right? I think that introduces moral hazard. And so I think that protocol changes. Like, would you be supportive of a protocol change that stole $50 billion from a company in the Bitcoin ecosystem?
No, I wouldn't be supportive of it.
Yeah.
No.
Somebody else says, well, it's just a free market. Well, I would say it like this.
But hold on, for that company to lose 50 billion, say from a starting point of 100 billion, say you're saying cut in half, everyone would be cut in half. So
no, not necessarily. Like you can introduce protocol proposals that are discriminatory that hit certain exchanges or certain business models, or for example, proof of work to proof of stake. It destroyed the Ethereum miners. It was a very targeted protocol change that basically deprived, what's it worth to basically do Ethereum mining? Well, it would have been worth $100 billion. What's it worth today? Zero. Okay, where'd the money go? Well, it went from people that would have had 100 billion to people that now have the 100 billion. And so
but what are you saying then? No changes? Are you saying no more changes at the protocol level?
I'm saying, well, first of all, I would say Bitcoin would be a lot better if the protocol was stable. It's like, do you want to change the numbers 1 through 9 and 0? I mean, like for example, how long has 0 through 9 been a stable mathematical protocol? It's not the only one, by the way. There are a lot of it. There's base 2 math. There's base 16 math. There's base 8 math. There's a lot of other ways to do it. But the question is, if I have a machine that processes base 16 and I go to a politician and I get them to pass a law making it illegal to operate machines on base 10 and you have to switch to base 16 and I'm the guy that produces the machine, you don't find that to be a little bit corrupt?
I don't buy the analogy with government because the point of Bitcoin is it's rules without rulers. So social consensus is important. Minor signaling is important. But I do want to just stick on that question because I think it's important. Are you basically saying no more changes at the protocol level? Or you?
What I'm saying is people shouldn't deprive other people of their economic rights without due process. And I would say that if you have a government that routinely seizes people's property and doesn't respect economic property rights, no one's going to want to live in that country. So I'm against socialism. I'm against communism. I'm not in favor of authoritarianism. If you told me that here's a country where they just make up new laws to steal from people in the country, I would say, I don't want to live there. And so Bitcoin, in theory, is supposed to be a libertarian network where we respect property rights. And I don't think you're undermining my property rights if you write software to make the nodes work better. But I think that if you actually change the bandwidth of the network, right? If you inflate the bandwidth, you've definitely deprived everybody in the ecosystem of certain rights. You've undermined the security. If you inflate the money supply, you've deprived people of their rights. If you change the hashing protocol, you've deprived people of their rights. If you actually destabilize the network by if you sacrifice the performance and the stability of the network to introduce altcoin, crypto, shitcoin features into the network, right? You've deprived people of their rights. If you hijack the Bitcoin mining hardware in order to do other applications other than SHA-256 hashing to defend Bitcoin, you've undermined the security of the Bitcoin holders. You have destabilized the network. You may have introduced all sorts of attack vectors for hackers and also legal risks, regulatory risk, and nation state attack vectors. And so there are lots of protocol changes that actually destabilize the network, or they deprive some participants of the network of their rights to the benefit of others. And my position is, I just don't think we should deprive people of their rights. And I don't think we should use code in order to advantage one special interest group to the disadvantage of everybody else.
So if we had quantum computing and SHA-256 became at risk, we could move to a quantum-resistant hashing algorithm that would protect people's property rights. So that would be something, would you be in favor or not?
I think that when there's broad-based consensus that we need to do this to defend Bitcoin, then I think, we're going to do it. It's a no-brainer.
But I think defending Bitcoin can become subjective because address formats can change to create more efficient transactions. That's better for everybody who holds Bitcoin, who wants to send Bitcoin and spend Bitcoin, but not so good for the miners. So in that scenario, you wouldn't be in favor of that because that would be depriving miners of their
I'm not going to. I don't think it's appropriate for me to give you a definitive yes or no. I support a very.
It's tricky, yeah.
The point I'm trying to make is there are some things that make sense that would just generally, broadly, universally or near universally be viewed as good for the network. I don't think they're controversial.
Yeah.
There are some things that may or may not be good for the network, and they merit a lot of discussion. And there are some things that, on the margin, it's not clear they're good for the network, right? And they probably don't merit a lot of discussion. Let's just take vaccines. Everybody talks about vaccines. Smallpox used to kill like 10, 20% of the world. Everybody had a member of their family that died of smallpox. right? Smallpox was a rampant epidemic. You roll the clock back 300-400 years. Your odds of getting it are 20, 30, 40%, and it kills a third of the people that get it. Okay, along comes people with the idea of let's vaccinate against smallpox. Does it work? We don't know. It took 100 years to work through it. Eventually, there was a consensus that the smallpox vaccine works. Even having said that, hundreds of millions, maybe billions of people died of smallpox in the history of humanity. So today, if you were to ask people, do you think you should vaccinate your kids for smallpox? Generally, the consensus would be, yeah. I mean, given the fact that it killed like 1/3 of the Native American Indians that weren't vaccinated, yeah, probably. And on the other hand, if I posit a theoretical disease that may pop up in 10 years that may in fact kill us all, and then I rush a vaccine into production in 6 months, and then if I go to the Capitol and I get a politician to pass a law requiring that everybody take the vaccine, including your kids, and then I put you in jail and deprive you of your job if you don't take the vaccine, right? It's the same word, vaccine, but one of them we developed very carefully and conservatively based upon consensus over a long period of time. And the other one was a well-intentioned scientist that just wanted to help, that was trying to think about the future. I think Nicholas Taleb puts this best in, most of his books. He calls these people intellectual yet idiots. It's like I sit around and I imagine 100 things that might go wrong in the country in the next 100 years. Now that I imagined it, whether it's the oceans rising or the ocean sinking or the atmosphere boiling or we all die of this or we all die of that or the kids don't get enough of this or they don't get enough of that, once I figure out the existential threat, then I go and I create a law, and then I lobby for the law, and then I get the law passed, and then I get the law funded, and then the government forces, first they buy the thing, they force you to take the thing, they jail you if you don't take the thing, they shut down your business, discriminate against you, they hijack the entire media system, they inflate the currency to pay for the thing, and then we go to the next thing. And it's a meme, the next thing, what's the next thing, what's the next thing, what's the next thing? I think that the way that empires fall is you have big government, and there's big defense, there's big tech, there's big medicine, there's big lobbyists, there's big government, there's big banks, there's big something. It's people with big ideas, and they're all convinced that the government needs to save you from yourself, and this is good for the country. I don't think it's that different with Bitcoin. It's like, no, I'm not in favor of big protocol. I think the whole idea of big protocol is the free market can't solve the problem. And at the end of the day, you have people that don't believe the free market and individuals can solve their own problems. So the government's got to step in and help. And then it becomes the government's got to do it for you. And then it becomes the government's going to force you to do it. And that's the road towards serfdom and authoritarianism. And that's how empires fail. I think in Bitcoin, right, that you can take the position that is the protocol working or is the protocol not working? It looks to me like the protocol is working. It's the most successful monetary protocol in the history of the world. It's gone from 0 to $1.4 trillion in 15 years. It looks like it's on a path to go to 14 trillion, and I don't know why it wouldn't go to 140 trillion. So I look at it right now, and it looks like the protocol as it stands is capable of going to the point where it constitutes 5, 10, 20% of the capital in the world. It's going to change and inject freedom, sovereignty, and sound money into every country, every company, every institution. That's the path we're on right now. And so why would you want to interrupt that, right? And I think that the danger is you can figure out how to break it, right? Like if you just get out of the way and let the free market function, there are 300 million companies and there's thousands and thousands of agencies and there's 8 billion people that are going to adopt the protocol and the world will be a much better place. And I happen to be the optimist that thinks less is more. Let the protocol work. And in the words of, Hippocrates, do no harm. Right? I think when you have a healthy child, if I come into your house and I say, I know you got a healthy children, but I have this theory that maybe in their 60s, they're going to die of something. And so I want to try my experimental drug on them now.
Yeah, fuck off.
You would tell me, get out of your house. At the end of the day, but how much worse is it if I say, well, I have a theory that the entire world's going to end in 40 years and I want to try my experimental drug now just to inoculate us against it. And I think that that's not the case. I'm quite the optimist. I actually think that Bitcoin is going to succeed. It is succeeding. It's succeeding as fast as it could reasonably succeed. And we ought to try to avoid the tendency to F with it, right? Remember the meme, I just heard about Bitcoin, I'm here to fix it? Well, so if I had come into Bitcoin in the first 4 years, I said, I heard about it, but here's my list of BIP proposals to fix it, how would people react?
Yeah, I know. Yeah.
It's like, fuck off, right? And so the point really is, just because you've been around for 10 years or 5 years or 15 years doesn't mean that, a diversified, aggressive slate of BIP proposals that might make it better are any more valid. You ought to consider all of the people you affect.
So that needs a strong culture of conservatism within the developers, because look, Jeremy Rubin has struggled to get CTV through. But there is an increasing number of voices, more people you may consider a little bit more liberal with proposals for Bitcoin. And as we lose an old guard, as we lose people like Peter Willey, less involved, I think there is a risk of losing that culture. And so, but I think it can only be solved by culture.
I listen to all the Bitcoin podcasts. I listen to a ton of Lavera's podcasts. I listen to a ton of your podcasts. I listen to, a lot of the proposals. And there's a lot of discussion about the code and how a certain upgrade would add a feature or add a capability or add some scalability. And there's a big emphasis on, well, we need 1 billion people to be able to self-custody their own Bitcoin, and 1 billion people need to be able to do a lot of transactions on the base layer, or else Bitcoin has failed. I won't say everybody believes that. I'll say there's a lot of discussion for people that want to add upgrades to the network. And when they're focused upon the sovereign individual, and they're focused on the code. What I don't hear is a lot of discussion about the second order effects of what happens when the unintended consequences. It's normally like arm waved away as, yeah, there may be some, but we need this feature. And of course, we could see the unintended consequences, and sometimes you don't always see them all, but there's a lot of them. And then I don't see a lot of discussion of the impact of any given change to the Bitcoin ecosystem. What is the impact of this on Coinbase, on Cash App? What is the impact on Fidelity? What is the impact on all the Bitcoin miners? What is the impact on all the Bitcoin ETF issuers? What is the impact on all the Bitcoin holders and the various types? And then I don't see a lot of discussion about the impact on the free market. How will this change impact the view of everybody that has not yet joined the network? How will it impact the view of skeptical politicians? How will it impact the view of Apple, Google, Facebook, Amazon, Microsoft? How will it impact the Chinese view? How will it impact the Russian view? And then I don't hear a lot of discussion about, are we prepared to live with this for the next 1,000 years? Right? And what might happen over the course of 100 years or 200 years? Right? So these are second order, third order, fourth order, fifth order effects. And of course, the answer would be, well, we don't have time to consider all those things. We have 1 hour or 2 hours. There's no way we have the bandwidth to consider it. And my answer is exactly. We don't have the bandwidth to consider it. You want to introduce a new protocol change that may have catastrophic or structural inflationary impact, or it may have regulatory impact. It may deprive someone of their property rights. It may create a moral hazard, an ethical hazard, an economic hazard, an engineering hazard. All of these things need to be considered. And when you get in a hurry, what happens when you get in a hurry in a war, whether it's a war on COVID or whether it's an actual war, what happens is a central planner jams this down the society. We implement the draft, you go to war, you kill people. We implement medical policy, we implement lockdown policy, we implement centrally planned banking policy. There wasn't time, we had to shut down that bank. We had to shut down 40 million businesses. Why? We had to do it for the good of the people. And so I think that there's a lot of bad decisions that are made when you get in a hurry. And fundamentally, I would just say, I'm not in favor of central planning. And I think that most of the Bitcoin community doesn't agree with central planning. So why would you want a dozen developers to centrally plan the protocol and then to make changes because they think it's academically, theoretically good for everybody? You get to make the decisions for the next 1,000 years for 10 billion people just because you have a good idea? And my answer is no. I don't think that it's wise for us to encourage people to play God. I think you get to play God once. Satoshi played God. I think the rest of us ought to have the humility to say, we're not Satoshi. By the way, the odds were 10,000 to 1 against Satoshi. Satoshi rolled the dice. He won. We're good. But now the way that empires fall is the person that inherited the United States, that inherits Bitcoin, that inherits the corporation. They think they're just as smart, and they're just going to go ahead and roll the dice just as hard, and they're going to play God. And I think the history books show the result. The result is they always fail. The empires always crash and burn. And the things that last are these protocols that we have respect for, like Arabic numerals. I understand protocols evolve, Peter, like the English language. The English language has evolved over 1,000 years, And if you go back to the King James Bible, you can understand it, but it's obviously used differently today. I'm okay with the protocol evolving over 400 years, carefully, conservatively, deliberately, because everybody says it's in our collective economic and political interest to do this. I'm just skeptical of people that have good ideas that are in a hurry that would like to change the entire network because it would make their project easier.
Yeah, and I don't want to stay on this track for too long. I'm conscious we could go round and round in circles. I'm not sure that 12 developers can make it a change, but I think that the trend here is something I 100% agree with, which is a strong culture of conservatism with development. I always tend to lean towards what an Adam Back thinks, what a Matt Corallo thinks, what a John Carvalho thinks with regards to things. And there tends to be this culture of conservatism. And I think we've kind of had that, really. I mean, I joined during one upgrade, and there's been one big upgrade since. And right now, I haven't seen anything on the table that I really like. So I think we're in agreement.
And I agree with you on those names, too.
Yeah.
I mean, I think that there are voices of reason and voices of maturity and voices of conservatism
and experience.
And the other point to be made is the protocol doesn't have to do everything. That you have to leave opportunity for functioning and scalability to the layer 2, to the layer 3s. And oftentimes the most aggressive protocols, they dismiss the role of corporations in this entire equation. Like the idea of be your own bank. It's like, well, everybody's just got to be their own bank. But I think at some point we're sacrificing the interests of sound money in pursuit of the ideal of sovereignty of the individual. And it's not clear to me that you get both, right? And certainly you don't get both at the same time. Like maybe sound money introduced in a sly roundabout way would be a monetary asset adopted by every bank, every government, every corporation. It backs every currency. It backs every piece of debt. It backs every equity. And everybody in the world universally agrees on it. And we still have corporations. And I think if you consider it, it's pretty obvious you're going to want corporations to generate electricity, run your hospitals, do your dentistry, create complicated equipment, et cetera. So I think that if you allow for corporations to exist, then some of the existential threats that we imagine that force us to take risk with and rush protocol changes, those kind of dissipate. And then you say, well, maybe what we'll do is we'll be a network that has 100 million or 50 million sovereign individuals. And those individuals will include JP Morgan and Apple Computer and the Bank of China and the Bank of England, right? Mega corps, mega banks, mega countries. And maybe we're safer if they all join the network as opposed to construct a network to keep them out.
Yeah, I think this is kind of the conclusion I've come to, because for about a year now I've been asking the question, is that can you be self-sovereign on the Lightning Network? And I've got a range of answers, not particularly good or convincing, but an economy based on sound money is certainly leaps forward. And look, it might just be a case that if you are sovereign on the base chain, that is a privileged position you get. Not everyone can have that. Jeff next door can't have that.
On that subject, I think it's important. People sometimes say, well, that's just like the gold standard and gold centralizes. But it really isn't. If you had 100,000 banks and 100,000 corporations and they all had billions of dollars of Bitcoin and they settled with each other on the Bitcoin network, and there was Bank of China, Bank of Russia, Bank of England, Bank of Switzerland, Bank of America, Bank of Brazil were among them, and Alibaba and Apple were among them. I think that your rights as a Bitcoiner and your freedom and your sovereignty would be much better defended by all of those powerful actors that also adopted the Bitcoin standard. Because what you're doing is you're replacing 40,000 banks that are all trading through one node, right? The Central Bank of America, right? You've got one bank that controls the monetary policy and the value of the reserve asset of every corporation and every bank in the Western world. You're replacing that with the Bitcoin base layer and Bitcoin the asset, and that's a vision we can achieve in the next 20 years or 30 years. We can achieve that in our lifetime, and we don't have to change the protocol to achieve that vision of every powerful entity on Earth universally settling with each other and trusting each other using Bitcoin the asset and Bitcoin the base layer. So I don't see the immediate existential threat that necessitates that we have to take risk. I do think that if we put our focus on getting every powerful entity on Earth to adopt Bitcoin that isn't, we convert all of our potential enemies into friends, and we accelerate adoption to the 8 billion people much, much faster than making protocol adjustments.
Okay, so this makes the next question even more interesting, because I think I'm aligned with you, but what about developer funding? Because that has come up with various accusations. But what's your position on developer funding, and do we have enough developers?
I think we should fund developers in a surgical fashion, knowing what their priorities and principles are. So like when I listen to the principles of the Bitcoin core devs, like Gloria, they're pretty good principles.
Yeah.
Right? They're very grounded, very thoughtful, considerate. And it's very, when I listen to the principles of Steve Lee, they're very good principles. It's granite, make the granite good, make sure it doesn't crack, and then trying to think about how we stay decentralized and stay rock solid. When I think about principles, from Carvalho, I think pretty good principles. And then I look at every project, and I think some projects strike me as being improvements, And then I look at others and I think someone says, well, we just really want to duplicate all the functionality of Ethereum on the Bitcoin network. And, and I'm like, well, I don't know if that's such a good idea. At some point, Bitcoin is succeeding because it doesn't do certain things, right? Sometimes the absence of a feature is the feature. And if we did everything, we'd be less successful. And so humility, suggests that you got to know your limitations. So here's what I don't agree with. I don't agree with unlimited, ungoverned funding for anyone that wants to change or lobby for a change to the Bitcoin protocol. I think that when you have unlimited, ungoverned funding for people that wish to modify the protocol, it's like you're trying to give yourself a disease. And what happens when you overeat, overdrink? You give yourself metabolic disease. So I don't want to give ourselves cancer, and I don't want to give us a heart attack. And here's what happens when you have big charity. When you have a mega billionaire, right? You could point to Gates, you could point to Soros, you could point to whatever, and they start by trying to do good for the world. So they're like, I want to help, save the world from global warming. I want to save the inner cities. I want to do this. That $1 billion trickles down 3 levels. And by the time it gets to the 5th level down, it's financing someone that wants to defund the police. It's like gay rights ends up financing, men in the women's locker room beating the shit out of the girls. It's like, well, did it start that way? There's no one that financed it thinking that. But what happened is, if I made $1 billion gift right now and I said, here, my $1 billion gift is to make Bitcoin better. Well, that money might find its way into a bunch of crypto shitcoiner hands, and they might decide to port Ethereum to Bitcoin and create proof of stake. And then they might go and start spending hundreds of millions of dollars to lobby for something which is just whatever they think it's better. So I think that I think it's a bad idea. Big charity. By the way, I just think big charity is a bad idea. Like I don't like big government, big medicine, big defense, big lobbying, big protocol, big charity. What are they all? They're all centralizing organizations with infinite power run by a few people at the top. And the person at the top, it's like big tech. I just want to help the world that's in panic. And so I'm going to censor everybody that uses the following 6 words, and you get ripped off of one of the networks. They don't think that they're doing the wrong thing. They think they're helping, but big centralization results in a distortion by the time it trickles down. And so that's why I'm not in favor of big development. I don't want a developer industrial complex, right? And the irony is, people worry about like Wall Street taking over Bitcoin, right? The criticism I've got on this topic is pointing out to certain Wall Street firms that maybe it's not a good look to provide unlimited, ungoverned funding, to development efforts that might destabilize the network. Right? For example, would you want the people that support the other crypto networks, the proof of stake networks that are centralized, would you want them to be funding Bitcoin development initiatives to make Bitcoin better?
No.
Okay, so do you want people that don't distinguish the difference between those two to fund all the Bitcoin core devs? My point really is I'm in favor of thoughtful, principled development. But in terms of dollars, I think you can go 10,000 times as fast on the layer 3 and above because you're just risking your company and your shareholders, and you should go fast. I think on the layer 2, I think you should go 100x slower on Lightning or any other layer 2, and you need to bow to the community consensus. Even like with the Orange protocol that MicroStrategy looked at, we got people concerned about the efficiency. The first thing I did is I said to my devs, go talk to all those people, figure out what the concerns are. Don't do anything that makes it worse, right? I think you have to be politically sensitive, and you have to seek consensus at layer 2, and you got to go slower. But at layer 1, I think you should be 10,000 times slower. It's like, if I said to you, Peter, I'm showing up in the UK, I'm going to launch a business. Do you want to oversee everything I'm going to do and tell me whether I can do it? And you'd be like, I don't have time. Do whatever. If it works, it works. If it doesn't work, it fails. If I said, Peter, I just got put in charge of the UK. I'm the dictator. And I'm going to put in place a law, and it will last for 1,000 years. And I've got 20 good ideas. You know, do you want to talk about it in an hour? You want to talk about it a day, a week? Or actually, is there something reflexive about that where your skin crawls and you go, why should, here's the difference between Bitcoin protocol. You could say in a way, I'm more conservative about the Bitcoin protocol than I am about the government of the United States or the UK or the EU. At least you can leave the United States. You can leave, if the government gets, you know how many laws there are? It's like, 10 million pages of laws on the books, right? Like, they didn't used to be. Ask George Washington what he thought about that, right? So most governments, they just stack up 100,000 pages, million pages, 10 million pages of regulations, and they're all inflationary, regulatory, and then the heart stops and the society collapses or it gets cancer. And that's the end of the civilization. But here's my issue. People die. If the mayor or the president has crazy regs, they eventually get voted out of office or they die. Laws last until they get repealed, but then again, the nation may fail. The Bitcoin protocol might last. It should outlast any politician, and it should outlast any government. So I think when you're inserting stuff in the protocol, whether it's SegWit, whether it's Taproot, whether it's the next good idea, you have to be saying, well, how do I feel about this 150 years from now? I'll give you one simple example. The mayor of New York City gets to pass a zoning ordinance in the year 1776 saying you can't build buildings more than 5 stories because it's not safe then. Okay, then along comes steel, and 5-story zoning ordinance don't make any sense, so we repeal that zoning ordinance. But then what if every mayor of New York got to put another covenant, another lien, another zoning ordinance on the land? It's like, you can't bake bread, you can't have fires, you can't have a nuclear reactor, you can't have explosives, you can't use steel, you can't use electricity, you can't build more than 50 feet up in the air. Every one of them had a reason. And look at New York City today, and then imagine if any of them still stuck around. And then also, it's like, do I really want someone in the year 2024 to be able to put a recursive perpetual covenant on whatever property they owned on the Bitcoin network that'll last in the year 2400? Right? Aren't you just impairing the asset forever? Now, I'm not saying every covenant proposal allows you to do it. I'm not even criticizing any particular proposal. I'm just pointing out that there's a certain danger to being able to write laws on the network that are perpetual, that will go on for 1,000 years. And the mayor of New York's not thinking about that, and politicians aren't thinking about that, and the people that are lobbying in favor of it aren't thinking about that. But I think that today, and I wouldn't take such a conservative view in the year 2012. I would say in the year 2012, the risks on the margin are greater. Bitcoin will fail because maybe of some lack of functionality or performance, or you're going too slow to fix the bugs. And so I think that you have to look at the risk reward profile every year from 2008, 2009, all the way to 2024. I would just say it's logical. A logical principle is the bigger the network gets, the more likely it is to be successful, the more conservative we should be about protocol changes, right? And the more careful and considerate we should be about the second, third, fourth, fifth, and sixth order effects, right? And we can't afford to make decisions in the year 2024 or 2025 the way we made them in 2016, right? We need to be careful. That's fair. There's a lot to lose. And so that's the way I think of it.
All right, conscious of time, one thing we haven't touched on that we talked about yesterday and we can do the short version. Gensler. But I think it's a really interesting time. The game theory of Bitcoin is playing out in the political landscape of the US ahead of an election. And it's, having been around a few years in Bitcoin myself now, to see this it's kind of insane. But what's your read of it all?
I think that in 2020, Bitcoin was unstable, and it was unclear whether the Republican administration was in favor of it or against, and then maybe they leaned against it. And I think that the Democratic administration came in, and Gensler came in, and actually the administration flipped from Bitcoin is a digital currency competing with the dollar, we should ban it, to Bitcoin is a digital commodity, speculative asset, doesn't compete with the dollar, we don't have to ban it. So the first contribution of Gensler was to actually legitimize it as a digital asset and a digital commodity. I think that Gensler, respects Satoshi, believes in the vision of Bitcoin, always did. We know that. I've listened to all of his lectures at MIT. So he came in as someone appreciating Bitcoin as a digital commodity. What happened next is Gensler then established the principle, the proof of work is superior to proof of stake. And so I'm going to lay out the positives, the contributions Gensler's made. He legitimized Bitcoin as a digital commodity. He showed the world how you create something decentralized. He pointed out Satoshi, and the Immaculate Conception is the right principle. He pointed out that staking is probably an investment contract, and he explained why going to proof of stake is not a good idea. Then he was very hyper-conservative in normalizing Bitcoin in the ecosystem, holding back for a while. Eventually, right, we have to go all the way to 2024 January before we get the approval of the spot ETFs for Bitcoin. But the single most important thing that happened in this epoch was the approval of the spot Bitcoin ETFs. That basically was crossing of the chasm, which said that Bitcoin is not a multi-$100 billion asset class. Bitcoin is a $10 to $100 trillion asset class. So that was a 10x to 100x. And so we got that from this regime. But I think in the meantime, the SEC has basically been very, very obstructionist, and at war with the entire crypto industry, and we know that, right? Suing all the crypto exchanges, suing a lot of the entrepreneurs, and what we didn't get, right? We got a very passive, what is the word? Like a minimalist embracing of Bitcoin by the CEO, very reluctant under protest. Yeah. Embracing. And then there were a couple things that happened that were triggers. The SEC denied and has been stalling the approval of options trading on these spot ETFs. It's slowing them down. So just, those are coming a year or 2 years later than they probably ought to come. If you agree that Bitcoin is a spot asset, why not approve the options for the same spot ETFs? And then the SEC denied in-kind creates. So you couldn't just trade your Bitcoin for the ETF. And so that both of those make these spot ETFs inferior. And then the SEC put forth SAB 121 that made it impossible for a bank to custody Bitcoin. So we got the minimal acceptance of Bitcoin. It's like the minimal thing I can do to legitimize it. But these other logical things, let the banks custody, let people hedge it, and then let them trade Bitcoin for securities. These things, which would normally be they're normal and customary in any other asset, they were denied, and so we're going at a very slow rate. So
they're letting you in the race, but they're blindfolding you and cutting a leg off.
Well, I think that created a lot of friction between the Bitcoin community and the SEC, right? Then you have the friction between the crypto community and the SEC, which I don't have to go over it, right? There's 100 stories, man. And that was exacerbated by the fact that over the course of 4 years, the SEC never put forth a digital assets framework, right? So you've got an entire industry, and for it to live, it needs you need a way to establish a digital commodity versus a digital security versus a digital exchange versus a digital currency. And the position of the regulator in this case was, I'm not giving you any framework, and the implication is you guys all have to just roll over and die. So how do you tell 400 million people that support an industry and the entire industry that they all just have to cease operating, right? And so that's a very obstructionist view, like a non-constructive view toward the crypto industry. And then I think the third thing that happened here is we had a lot of banks. There are rumors in the market that there were banks that spent $100 million or more to get ready to do Bitcoin custody. Okay, so you have a bunch of banks spending money, they're ready to do it, and then SAB 121 is just capriciously denying them of the ability to do it without explanation. Okay, and that brought the SAB 129 debate because, SAB 121 means Wall Street, the banking law, the bankers, the crypto lobby, and the Bitcoin lobby, all four of those constituencies all side together on the same issue. So that being the case, the SAB 121 repeal comes up, and then the position of the administration is we're proactively going to veto it. And now you basically have the administration against Wall Street and crypto and Bitcoin and the banks, right? And you have the welling up of frustration over 4 years, which reached a fever pitch. And the combination of that plus the ETH ETF coming up for approval with the expectation that it's going to be denied, punctuated by the lawsuits against Uniswap and MetaMask, which kind of are what caused people to conclude it would be denied. I mean, we all thought it'd be denied 2 weeks ago. Mm-hmm. I thought it would be denied. The entire consensus, even the Ethereans thought it'd be denied. So that brings everything to a head. The bill goes to the House, it passes, then it moves into the Senate and it passes. That's a shocker. And then, of course, Godzilla walks into the room, and the Trump card, right, is Trump, and Trump becomes crypto engaged, and Trump comes down in favor of crypto. If you believe in crypto, you better vote for me. And then the next thing you see is the polls flip, and the Republican frontrunner is ahead of the incumbent, right? And when Trump flips Biden in the polls, now you see the entire Democratic Party flip. And so I think in the past few days, this literally happened over the weekend, I think. This weekend, I think you saw the political wind change direction. This became a political issue. And the strategists think, wait a minute, 80 million people with a Coinbase account or 80 million Americans with crypto and a big crypto lobby, and we're going to be on the wrong side of this. There is no one that's going to vote for you because you're anti-crypto or anti-Bitcoin. No, there are no votes. There is an army of people that'll vote against you. So I think the White House changed policies. The Democratic Party changed policies. The signal of that was Chuck Schumer in the Senate voting in favor of the repeal of SAB 121. And you can see why he might. Basically, Wall Street's adopted crypto. Wall Street's adopted Bitcoin. They want to custody it. They want to securitize it. And the crypto industry is just fed up. I mean, they've had enough. And, it's like, I think Sun Tzu says, you've got your enemy cornered, leave them with an escape. Okay, I think that the regulators overplayed their hand in this regard, or a regulator overplayed their hand. If you basically got an industry that represents 80 million Americans and their only option is to fight you or die, it's a battle to the death, right? It's that's a very difficult fight. You polarized it. So I think that the dam burst this weekend, Monday morning. The policy of the administration flipped, and now I think they realize that they're best to accommodate, give Wall Street what it wants, give the banks what they want. I think there's a lot of details yet to be figured out, like what will happen next. But all of the signals in the market suggest that the Republicans will be violently pro-crypto, pro-Bitcoin, and the existing administration, the Democrats, will move to accommodate.
Reluctantly pro-Bitcoin.
They will move to accommodate and stop taking such an obstinate position. And,
wild though, isn't it?
And it is wild. It upends everybody's model.
Yeah.
It's like when things get political, and this gets very political, then you just have to rethink all of your premises. And so here's what I think. I think 2 weeks before, the world looked like Bitcoin was going to be the only asset securitized and offered as a spot ETF by the Wall Street establishment, and it was going to spread as the one legitimate crypto asset. I think right now, the best expectation is the crypto asset class will be legitimized, supported by both parties. There's an industry. Crypto is an asset class. There's an entire range of use cases, 24/7 digital trading, digital art, NFTs, tokens, decentralized this, functionality, DeFi. There's a lot of things that will be considered in a more open light, and Bitcoin will be the leader of the crypto asset class. And if you look at it and say, well, is this good for Bitcoin or not? Yeah, I think it's good for Bitcoin. I think, in fact, it may be better for Bitcoin because I think that we are politically much more powerful, supported by the entire crypto industry, right? They obviously have a lot of political power, a lot of users, and they serve as another line of defense for Bitcoin. So I think instead of someone saying, well, there's one crypto asset, maybe I'll allocate 1% of my money to it, I think mainstream investors might say, oh, there's a crypto asset class now, and maybe we'll allocate 5% or 10% to the crypto asset class, but Bitcoin will be 60% or 70% of that. So I actually think it could accelerate institutional adoption.
We're back to indexing.
It's good for marketing. Yeah, there'll be all these other things that'll happen, and you just kind of have to rethink, all of your models and move forward in a new world. With the caveat that I looked at, last night, FIT 21, the crypto bill was passed in a landslide by the House of Representatives.
73 Dems voted for it?
Yeah. I don't know the exact number, but it was like 2/3, 1/3. So it was a 66% or something majority. It's a 484-page bill. Okay. So I started reading it, and reading, it's hard to read 500 pages and internalize it, but I'm sure they haven't read it.
Yeah.
And it goes to the Senate. And so I imagine there'll be a lot of debate about what goes into 484 pages. What clearly they want to do is they want to create a regulatory process to establish a digital commodity and define decentralization and define a digital commodity and treat the rest. I think that, again, this will be political, but the difference is instead of one party has taken the position, limited Bitcoin, nothing else. We're afraid of Bitcoin. The only explanation I can come up with for why you would believe in Bitcoin but be so resistant to Bitcoin options, in-kind creates, and Bitcoin custody for banks is Bitcoin's so good, we don't want it to go too fast. We don't want it to grow too quickly because it might destabilize the traditional system. But one party was limited Bitcoin and the other party was crypto. And now we've got one party, we're defined by crypto advocacy, very pro-crypto, pro-Bitcoin, aggressively pro-crypto. And the second party, responsible crypto, responsible Bitcoin, but we're enthusiastic, right? I mean, that's how the playing field is shifted. And that will ripple to the rest of the world, right? However the US goes, it'll go to Singapore, the UAE, the EU, and there are even signs that it's already rippled into Hong Kong, but it may ripple back into China. And so ultimately, I think 2024 will definitely be viewed as a pivotal year, but I don't see how you can view it as anything other than incredibly auspicious for the adoption of Bitcoin by nation states, large banks, institutional investors. And there's just an explosion in global consensus that this is an idea whose time has come, and we'll be living with a lot of other crypto ideas along the way for quite a while to come, I think. But none of them are threatening to us at this point. I think Bitcoin has gotten too mature, has become too powerful to be threatened by another crypto. I think this is going to be a case of a rising tide is going to lift all boats.
We probably could have gone for another 3 or 4 hours. I think that's a good time. I mean, there's so many things I wanted to get into with you I haven't done yet, so we'll just have to do it again. Thank you for your hospitality. Always a pleasure. I don't know when I'll see you next. Nashville, probably.
It was fun. We'll have something to talk about next time around, I'm sure.
Thanks, Michael. Thank you to everyone listening. See you soon.